Hello traders, welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello traders, Builder EA here with Follow the Bots. Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Tuesday, August 27th, 2013. We'll begin today's recap by taking a long-term view of the current trading range in the S&P 500 E-mini. Back on June 24th, the S&P sold down to its current low at 1554. The climax selling lasted for 3 days, and at the beginning of July, the market auctioned up off the low and consolidated for 5 days before auctioning above near-term resistance and trading back up to the prior multi-year high. After auctioning back to the prior multi-year high, the S&P went on and made two modest higher highs, trading up to 1705. After trading up to the new multi-year high, the S&P consolidated at the high for 9 days. Failing to find renewed buying interest, the S&P broke down below the minor support level at 1670 and auctioned back into the central portion of the current trading range. Last Thursday, the S&P pulled back to 1630. Having auctioned down to 1630, the market short covered through the prior 3-day trading range. The short covering rally continued on Friday, and the S&P traded up above the prior 4-day high. During Sunday's Globex session, the rally continued and the S&P traded up to 1667, at or near the transition point at 1670. After trading flat at the high for the majority of the session, late in the day the S&P sold off below the high and traded back down into Friday's trading range. Overnight, the selling pressure continued, and the S&P auctioned all the way down through the prior short covering range, traded down to the prior low at 1630, and went on to make a new low at 1626. The next support level is down at the 5-day consolidation high at 1620. For a detailed look at today's price action, we'll focus our attention on a 14-tick range chart. Here we see the short covering that developed last Thursday when the S&P sold off in the overnight session to 1630. When the market opened on Thursday, price had auctioned back up into Wednesday's trading range. There was a minor pullback at or near 1641, but the market failed to trade back down and fill the gap at the prior day's close. Instead, the short covering rally that we mentioned earlier ensued, and the S&P traded back up through the trading range, auctioning up to 1667 during Sunday's Globex session and retesting the high during Monday's session. The selling pressure continued in the overnight session, and by the time the U.S. markets opened, the S&P had auctioned back down at or near Thursday's low. There was a minor retracement up to 1644, and the market auctioned back down and retested the low a second time. The second pullback resulted in the S&P trading up to 1642. However, during the midday session, the market made a series of lower lows trading up no higher than 1636, and the S&P traded below the prior Globex low at 1630 and auctioned down to 1626 at or near the close. Coming into tomorrow's session, there is minor resistance up at or near 1634 and 1636. The two retracements are the more significant resistance levels, up at 1642 and 1644. Ideally, we would like to see the market retest the low and possibly make a lower low, trading down to confirm support at 1620. Indeed, if the market spent several days here at the low, building a base of support, the next rally would have more substance, and perhaps the S&P can auction back up to the 1670 price level and continue on to retest the multi-year high. Should the market fail to build a base of support and short cover back into the trading range, probability favors the short covering rally will turn into a similar situation as we saw during today's session, where no true support develops, and on the pullback, the market sells back down through the trading range. In the event the selling pressure intensifies and the S&P breaches support down at 1620, the 5-day consolidation range affords another support level down at or near 1600, 1590. That concludes our daily recap for the S&P 500 E-mini for this Tuesday, August 27th. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. We'll look forward to seeing you some morning at the open.
For more information regarding Zayner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zayner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.